Erayak Power Solution Group Inc. NASDAQ. RAYA. Professional Stock Due Diligence Report Executive Summary Company. Erayak Power Solution Group Inc. Established in 2019, operating via subsidiaries in China. Manufactures sine wave and off-grid inverters, generators, chargers, and portable power stations. Snapshot FY202 for revenue reached $30.3 million, up nearly 49% from FY 2023's $20.3 million. Despite growth, the company reported a net loss of $1.12 million. Takeaway: Erayak is a speculative micro-cap play in industrial power solutions. Strong top-line growth contrasts with weak margins, rising debt, and dilution risk. High risk, high volatility stock. One company overview and business model. Erayak designs, manufactures, and sells power solutions, including gasoline and solar hybrid inverters, off-grid power systems, and portable generators. Products are marketed under its own brand and through OEM/ODM partnerships. Customers include retail buyers, wholesalers, and e-commerce channels across international markets. And to industry and market position. The company operates in the portable power and inverter market, which is capital-intensive and highly competitive. Global players dominate, leaving Erayak as a small, niche participant. Its edge comes from lower costs and ability to serve OEM contracts, though scale is a challenge. 3 revenue streams: 2024 revenue, $30.3 million plus 49% YoY. 2023 revenue, $20.3 million to $0.22. Revenue, $26.9 million. Segments include generators, inverters, chargers, and customized power solutions for RVS, agriculture, and outdoor living. For competitive advantages, international certifications and OEM partnerships. Flexibility to adjust production for niche customers. However, limited scale and R&D spending compared to larger rivals. 5. Scalability. Expansion into Europe and the Middle East due to energy shortages and demand growth. Increased generator production lines. Developing warehouses in South Asia and the Middle East to strengthen distribution. Requires additional financing to support scale-up. 6. Financial statement analysis. Income statement 2024 versus prior year's revenue. $30.3 million 2023. $20.3 million. 2022, $26.9 million. Gross profit, $3.7 million. Margin, approximately 12%. Net income, $1.12 million 2023, $1.22 million 2022, plus $1.22 million. Balance sheet 2024, cash $0.53 million debt, $4.97 million equity, $26.6 million assets, $1 for 6M cash flow. CapEx around $0.5 million in 2024, relies heavily on equity financing. Previously raised $10 million from share offerings. 7. Valuation metrics. PE, not meaningful loss-making. EV, EBITDA, negative. Very low due to depressed market cap. Valuation reflects distressed microcap status. 8. Growth potential and TAM, large addressable market in portable power and renewable energy integration. Growth depends on expansion into Europe, South Asia, and solar home energy solutions. Execution risk remains high due to capital constraints. 9. Competitor landscape competes with established multinational generator and inverter manufacturers. No strong moat, relies mainly on cost competitiveness and niche OEM supply. 10. Management and governance. CEO and Chairman Ling Yakong, CFO, Lanling Jiu, has used reverse stock splits and discounted share offerings to maintain NASDAQ listing and raise capital. Governance risk is present due to reliance on frequent dilution. 11. Risks. Market risk, demand volatility, commodity price fluctuations. Company-specific risk, weak margins, thin cash reserves, reliance on dilution for funding. Geopolitical risk, China-based operations face regulatory trade and currency headwinds. 12. Dividends. Shareholder returns, no dividends, no buybacks. Shareholder dilution remains a key negative factor. 13. Insider and institutional activity. Institutional ownership is minimal. Insider holdings likely significant, but diluted by recent discounted offerings. Little evidence of institutional confidence. 14 technical analysis signals stock trades around 4 cents to 0.05, near record lows. Down over 90% year to date, with a 52-week high of $3.35. Ultra-low liquidity and high volatility make it prone to sharp swings. 15 recent analyst ratings and news sparse analyst coverage. Recent $7 million direct offering at steep discount triggered further sell-off. Company launched hybrid inverter systems for solar home storage markets, but stock reaction was muted. 16 red flags and watch list, weak gross margins and persistent losses. Minimal cash versus high debt load. Ongoing shareholder dilution. Potential delisting risk if price remains under compliance thresholds. Execution risk on international expansion and new product launches. 17. Investment conclusion bull case. Successful execution in solar home storage products. International expansion and OEM scaling could provide strong upside. Bear case. Continued dilution, losses, and weak demand could wipe out equity value. Investor fit, higher risk, speculative microcap. Suitable only for investors willing to tolerate extreme volatility and potential total loss. Summary table metric value comment revenue 2024, $30.3 million plus 49% YoY. Gross profit $3.7 M approximately 12% margin. Net income $1.12 million cash/debt $0.53 million $4.97 million market cap $8 to 9 M dividend policy none. Key growth drivers: solar home storage, MENA and South Asia expansion. Key risks: liquidity, dilution, delisting, competition.